Good afternoon, YouTube. Time for a little recap. So let's get into it like we like to start on the prior Twitter, X, whatever you want to call it. Our calls for this morning, let's go over them. 10 hours ago this morning, posted watching finally daily gap tag 497.50 short target under 500 SPY is short confirmation. So we put this up about 8:18 a.m. So this was shortly before open. That's the wrong time zone. I'm in Central, so this would be 7:18. About an hour and some change before market open, I drew this pretty picture of our target one short cover for our 497.50, right? So I posted this, drew the potential of what would happen if I take this down. You can see on the SPY chart right here. It's not bad. That's not bad. Got the little double top in there. All right. So moving on. I also put a clear target for Fibonacci for NQ. I was short into the top of the day. We did a high-low range after this dump. We closed a lot of our long-term puts down here. On the Qs, there's a 300-point dump at the open. So my team in my premium Discord, we've been adding into these longer-term puts for quite some time, and we just had a massive piece drop here for that last bit, which was pretty awesome. So this target right here, that was the open and that was the high. So I seen this big V reversal coming and said, yes, no problem. That's going to be a double top because of the 500 psychological number on SPY. So we went short from here. Then I targeted 17,340. And then of course the bottom of the fib is your next target, 17,181. But I wanted to be safe there. We called over 100 some points. And so on and so forth. And target hit as we predicted, staying under $500. And then, of course, another update from the old mobile as I was out and about earlier. Target hit 17,350. So that's 200 points. There's 350 right here, 17,550. So you missed that one. We put the free trade call out here, and that was exactly what we've been looking for. So let's talk a little bit about more intraday confirmations here. And in the last YouTube video, I noted that we did not get a gap fill. So this gray box right here is a daily gap that had not been filled during yesterday's price action. And you notice that that low here just had a big open gap. And I said in the last video, I'm going to leave some shorts on in case we get a big panic at open, because that's a very high % chance by double no fill gapping the algorithm. And what that means is we had 2 days worth of pushing into the gap where we had not filled it. So a lot of the time, things come in threes in the market, and then a huge cut down right here on that big drop after hours. I literally talked about this last video. I put it in the description for you if you want to check out the last video and how we predicted this and so on and so forth. We'll get you there. So we finally got the gap fill. We got all of our targets. Let's go to the weekly one more time, and I'm sure it's a broken record. Everybody already knew it was coming. So we talked about the weekly cooling off. We've been talking about the histogram on the weekly for multiple weeks now. That's why we've been adding into shorts to the backside. We picked the top Fibonacci, yada, yada, yada. And the final target is generally coming back down to the fibs golden pocket and lower. So we obviously hit the golden pocket, then we had some continuation, and the final target with the 0%. This is all bonus down here. I didn't get any piece of that, but all of my long terms and everything else was filled sub 500. If you check any of the last videos in the last 2 months, we've been talking about this dump to 498, 496 for quite some time, and finally came to fruition. So I just had to be patient, but some very cool levels that were hit here. Now let's talk intraday confirmation. So the psychology of the bands and confirmation. So I had the top-down anchor VWAP. So we use trading view for these anchor VWAPs, and you can see whenever something is a high, usually and generally in pre-market, I like to use these. So I grab the highest point of pre-market, and I just put an anchor on. I just let it calculate throughout the day. And then if it ever comes back up to the center VWAP or down -3 from a top down, right? Because we're picking a top and the anchor is pointed to that downside as price action goes down. We look for the retraces from overextension for scalps. So here on the Qs, you can see that it came into the -3. Okay, so this is your center, -1, -2, -3. And those leg downs, whenever it comes into a -3, like 2.5, there's generally a good pickup, right? So trend is under the 0 line, under the purple VWAP, and as long as we are pushing into that, we can reshort that every single time coming into there and just following trend down. Now, we could also long and play counter trend whenever something gets a nice extension like this, and then it starts to base after a -3 hit. That happened right here at the end of the day, right here midday, right here in the morning, and some of those are a little tight here in the morning to catch those, but with extra confirmation on those, you can see some of the histograms slowing down on that 5-minute chart there. Same with the SPY here. Same thing, top down. So high of pre-market. And if you see, we're under that VWAP anchored zero line. And whenever we got close to that, we could short it right here for that continuation. And whenever we got deep into the -3 territory, -3 territory, -3 territory, you get a pop back and a counter trend, right? So a couple of good scalps there. You had the higher low in the MAC right here. You had a really good opportunity to catch at least a little bit of counter trend pop there. A nicer one through the afternoon there. But last but not least, let's jump back into a couple different confirmation I use. This might be broken record for you guys, as we did cover a ton of this stuff already. So with that being said, we have 3 things I want to check out here. And that is, we have a algo, which I didn't play this one this morning, but this is that opening 5-minute candle. And a lot of the times these pre-market algos, it's high-low for me when there's a tail that long, and I point it to the downside, so I get my little fib box, right? So the price action started way above it, which is fine. We posted on Twitter and X, whatever you want to call it, 500 psychological number. 512 is their fib. So I shorted right into the double top area here. My clips program isn't running, but I have a full live trade video of what I did today for a $10,000 green, and I'll show you how I took one trade back and forth, back and forth, back and forth the whole day and made 10 grand on ES and NQ. So I'll be posting that as soon as I can figure out my clip. It just won't let me log into my editing program. So, but this double top right here at 500 confirmation already set us up for a lower high here. MAC was already crossed during the open. So we had MAC on the downside cross. We had histogram there. We broke into the bottom RSI channel for the continuation. As long as it stays in the bottom of the RSI channel, and we still keep selling and the moving averages open to the downside on MAC, we will go down, right? So there's 2 big confirmations there, which leads us into the third one, which is the Fibonacci, right? So our first target was the unfilled gap intraday. We put that right here for 98.12, 13, and we hit that right here. And you can see that boom, abrupt reaction from the algos, boom, abrupt reaction, finally let it go, and even came back and tested that same intraday algo, because those algos become historic support and resistance as fantastic over-under levels, in which that did today. So the last part of that Fibonacci, though, today, once that broke into the Fibonacci point, it gave us an opportunity to, again, play that fib. So we have the high-low fib right here. Here's our box, and I love these little algos. And then we generally take the golden pocket, which is right here. It came down to the 0 line, which is fine. That's another really good support. So if you started your trade into the golden pocket, managed it down to the 100%, you still came all the way back to the tippy top of the fibs, and then all the way back down. And we will continue most likely to that 493.50 to that downside with this algo. So the last but not least short target to go over is the 100 EMA on the daily, and that was obviously an algo tag after hours. I have this calculated to the intraday, so if you go to that after hours dump right there, you see this giant neon green line here. This is the 100 EMA on the daily chart, but it populates on our 1-minute, 5-minute chart right here for us. So this giant green, this is 100 EMA daily, and you notice that wash pinned right into that sucker. So that after hours wash that we had predicted as well, definitely had an opportunity to test that. Now we need a live tag of that. So I think we still have a little bit more red side. We'll see where the futures open up, but we can come down and start that panic. We could head down 491 or lower. We'll see. But we have pretty much everything on deck for the curl down, and it's been beautiful so far. So let's see if we get temporary bounces at the 100 EMA. I would more or less be looking at a green candle covering your shorts here. We've had a beautiful dump right through that 50 after some tests in the QQQ, and then right through on SPY, and now we're coming through that 0 MAC line, just dumping perfectly. And that's something we, all our videos covered it way back here. Mid-March coming into April, saying we were short, then grabbing this fat candle to the downside, and it's just a very beautiful, beautiful setup. So that weekly came all the way back down to the 0 line. 100 EMA is our final target, and we should get that this week. If not, we're going to bounce very close to this 100 EMA, and I'm out of all my shorts. So my long-term shorts started way back here, and we added on every time we hit a high, and every single time we just kept the leaps going, and then had a beautiful couple week panic down. Now, this 100 EMA can cause a back test, so I'd be looking actually for a long at the first 100 EMA tag. So this is your next long scalp area. Wait for the 100 EMA daily to hit on SPY. Take that sucker long for a green day or 3. And we'll see what goes on next. Wait for that 10 SMA to catch up. So we could hit some support here and jack back up till that 10 SMA catches up, or even that 50 SMA. We could get a few good retraces. And if we don't get that and she actually starts to panic out, perfectly fine. I'm not in the short anymore, but we do have a lot of downward gaps to fill for quite some time. And we also have a lot of moving averages. We talk a lot about conformational backtest. And if you notice here, a lot of these moving averages, and again, we covered this already, but just to reiterate, when we broke above the 200 right here, 666, 50, 50 and 100 EMA, every single one of these moving averages where price action had busted above. I'll move it up a little bit past that volume there. So you can see these candles right here. We broke through every one of those moving average and just launched ourselves into all-time highs. We never had a back test. So all of these need back tests as far as I'm concerned. So the 100 EMA bounce is temporary. We could actually see even lower down to the 200, 666, so on and so forth. But we're going to have to get intraday and oscillation indicators reset. So we're going to need this RSI and this MAC to come back up to a 50 and then continue back down. Same with the MAC. It's going to have to do this thing and this thing with the moving averages on the daily chart and have that continuation. We need a reset. We're coming into oversold territory here. We're right into a big support of the 100 EMA. We're going to expect a 100 EMA daily bounce, and then we can get this RSI back up to that 50 point and then take her back down again. And again, price action could lower high and then continue back down to those moving averages. So let's keep on in the macro. So short-term long right now, back to a rollover continuation. And that'll be it. Tune in for the next.